the question of, setting goals into reality, writing it down, speaking it into existence with your core group of people. And if your core group of people, speak negatively into that, or say, there's no way you could do that, or, rain on your parade in any way, well, then it's time to find new people and find people that will lift you up, that will challenge you, that will say, yes, how can I support you? Let me share with you what I experienced when I was going through some major growth. Or people that will say, oh, you have a goal of, buying one property a year. How do we add a zero to that? Let's think even bigger. So that was a big part of the personal and spiritual and mental growth that facilitated the growth of our company, our real estate portfolio, and all the change that has come over the last 12 years or so.
Welcome to CRE Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CRE Radio. Thanks for joining us. My name is Jay Darren Gross. This is a podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Corinn Altomare. Corinn is the co-founder of Hearth Fire Holdings, a real estate investment firm dedicated to creating durable wealth through innovation in real estate and technology. And in just a minute, we're going to speak with Corinn Altomare about how to turn your real estate investment goals into reality. But first, a quick reminder, if you like our show, CRE Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how attractive our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Corinn Altomare. Welcome to CRE Radio.
Thank you for having me, Darren.
Well, I'm delighted to have you, and I'm looking forward to our talk. Before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Sure. So we are recording this in November of 24. My first real estate acquisition closed in September of 2012. And that was bought really as a way for me to build up some passive income for myself. I was working by day as a project manager for the Federal Reserve Bank of Philadelphia. Home base for me is Westchester, Pennsylvania. And by night, I was still gigging and working very much as a classical musician. I'm a classically trained singer, worked in large choral orchestral works and a fair bit of opera. So real estate was really a way for me to have some passive income coming in between the paid and non-paid gigs and in between the office work during the day. So a very, very different background and life that brought me to real estate investing in the very beginning. From that first acquisition, it was a small multifamily here in Philadelphia. I met my co-founder partner in life and business, Sergio. We are a husband-wife team, and we bought a property together. About 9 months later, we syndicated another property with family and friends after that. And then we were off to the races. Quit the W-2 in 2018. We pivoted to self-storage in 2019. And our portfolio now is 19 locations, a little over 100 million assets under management. We've built and grown our team along the way. It would be a lot for just the two of us to do. And that's the very short story of the very beginnings, and fast forwarding to where we are today. And we can go wherever you would like to dive in during the course of that last 12-year journey.
No, I love it. I love hearing backstory and kind of how people get going. I'm always curious. It sounds like you were ambitious. You were looking for something in addition to the W-2. Maybe it wasn't as fulfilling as you'd hoped. I'm curious, how did you settle on real estate?
I do have to credit my parents for that. I'm very lucky that my parents came from nothing in Wisconsin. They actually relocated for work after they graduated college in Milwaukee and Cudahy area of Wisconsin. They went out west to California. So I am born and raised in Los Angeles. And my father went to law school out there at Pepperdine. And during the course of his studies or business networking or whatnot, he ended up meeting a gentleman that was like, you need to be investing in real estate. You need to be investing in real estate, in whole life insurance, as well as the stock market, like that being your kind of three-legged stool. So I have to give credit to my parents for absorbing that, taking action on that. They bought their first 8 units in Pasadena, California, managed it themselves. My mother was the hands-on manager when my father was running his law practice. So I have, very early memories of being there with mom doing apartment turnovers and all of that sort of thing. So that was embedded in me from a very, very early age. I was on this artist career track and had full awareness that I probably would not make a ton of money or have a lot of financial stability pursuing that life. So real estate was always discussed as the avenue for me to at least have a roof over my head, purchase a small multifamily where I could live in one unit, have other tenants help me cover my mortgage and living expenses, and then do what I wanted to do with my life. So that was how it fundamentally started. Hopefully that answered the crux of the question.
Yeah, no, it's at some point, people that get into real estate, it's not just like, "Oh, I just walked in, somebody sold me a property and I didn't know what it is." I mean, there's some sort of a why or a how they got into it. And I think having family that's been in it is always, or not always, but oftentimes is a real concrete cornerstone, familiarity, understanding. It's something that's been in um, your DNA, so to say. I mean, there's a
Yeah.
connection thing, and and I'm also always kind of curious. People that aren't in real estate tend to have more of a like a stock market view of real or of investing, is buy low, sell high, and there's this kind of a nest egg, kind of a something for a later date kind of thing, but not always fully understanding the mechanics of that. Um, I'm kind of curious when you got into real estate, obviously it was something you were aware of and understood, like the cash flow aspect of it. At what point did you understand the additional benefits of real estate?
I would say probably as we got into, I'd say probably year 2, year 1 of being a first time owner, occupant, landlord, with a day job and a night job and everything, was really just learning the ropes on my own terms, right? Experience growing up around my parents' portfolio was one thing, but then doing it completely on my own. That one I was on the East Coast. I am now on the East Coast. So right, doing the first property completely on my own from that perspective. Year 1 was learning all the lessons and navigating tenant relationships and contractors and lease management and all of that kind of fun stuff. So the question was, when did I realize the additional benefits of real estate? I would say into years 2 or further on from there. And that's also where we um, we're finding more opportunities in and around Philadelphia and had tapped out our individual personal capital. So that's where we started talking about the benefits with family and friends of like, hey, we bought this property last year. We've got higher paying tenants in it thanks to us increasing the rents and our debt relationships here and what we have going on. The first few actually all the multifamilies that we purchased in and around Philadelphia came with significant tax abatements. There was a very aggressive tax abatement program going on. So we were seeing really, really quick multiplication on our equity and wanted to continue doing more of that. My network back home in California was not seeing the same kind of opportunity. Prices to purchase real estate were much higher. There were certain things that were capped. Philly was really certain neighborhoods were then and still are very aggressively gentrifying. So really trying to encourage new property owners and landlords. So that is how we really started saying, hey, this could be more than just one or two properties for ourselves personally. Let's try to make something a little bit bigger out of this. Let's bring in our family. Let's bring in our friends, leveraging our networks and the pipeline that we had of properties that were being full gut rehabbed. And what we were doing pretty pretty quickly was we would take potential tenants through the properties as they were still being gutted, and we had leases signed and buildings fully leased up even before they were completely done. So the developer knew that they didn't have any carrying time. They knew as soon as they were done, we were taking it over. We were able to advance market and lease up the properties. The tenants felt like, I mean, they were getting a brand new building, right? They were able to get a jump on anything else that was coming to market. So that, I mean, it shifted very quickly from, oh, maybe we'll buy one or two a year and just build up a modest passive income stream to there's really some major opportunity here, and not keeping it just selfishly to ourselves, but sharing it with our family, our friends, our network, and doing something overall much more impactful, being able to kind of share the benefits, share the journey with our most loved people in our lives. And so from there, that just continued to snowball to where we are today with 250 some investors across our portfolio.
I love the recognition or two things you mentioned. One is you recognize the opportunity, and also I guess I should back up the fact that you were pre-leasing things and had that sense of urgency, understanding that, it's not just eventually, but that the time is money, and to, really, uh, you know, strike, and try and keep the energy going for the contractors, and have pressure on them to get things done, and also have somebody ready to lease kind of thing. Because I think so many times I find it's like, well, we'll call them when they move out. And, it's like there's um, this like eventually it's not their money kind of thing. So there's not a sense of urgency, and trying to create that sense of urgency is so, critical when you're the one paying or responsible for the mortgage and the expenses and
Absolutely.
that. And
Mhm.
I'm hearing you and I'm just going like, yes, 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 because it just drives me bananas. We have
Yeah.
rental properties too, but that's
Because,
that's
yeah.
something to recognize that, and to seize that opportunity, and then also not only did you um, create that sense of urgency, but then recognize the opportunity, and how it was a great opportunity where you were at. I'm curious, do you find that to be um, just something that you recognize, or was that in comparison more to like your family background in real estate, and just kind of your longer view of real estate and experience with real estate?
It was very much where we were and when we were. So it was a combination of I very much wanted to put my W-2 to work and qualify for a down payment, with my job, with my paycheck while I had it, because I knew that I didn't want a full long-term career there. So it was time bound from that perspective. I wanted to be able to qualify for as many as many bank relationships while I was still bankable with a solid W-2. It was what was going on in the neighborhoods in Philly. And thanks to, I mean, very much thanks to my husband as a local South Philly native, the dynamic certainly shifted when it was just me looking at potential properties as an outsider, as a recent transplant from the West Coast, to bringing in someone that was like, and it was interesting because we would have conversations, I'd show him properties and be like, hey, I'm looking at, XYZ property on this block. And um, he, having grown up in the city, would say, well, we don't go down that block. That's not a safe area. But what we were looking for was gentrified, like on the cusp, right? So we, maybe there were things that he might not have looked at, think being stuck in, oh, that's a bad side of town. Me coming in with fresh eyes, I maybe didn't know any better, but it certainly brought up some very lively conversations. And there was a certain amount of us getting lucky. We were able to get some great deals in gentrifying neighborhoods, and we did not hold them long term. As we went further on into our real estate journey, we were playing very much in the small to mid-sized multifamily kind of asset class. So when we decided that we wanted to scale and grow, we were like, well, we need to sell, we need to 1031 exchange into something larger, really continue to grow and multiply our equity. So I started out thinking that I was going to be a long-term buy and hold investor, realized the power of doubling my money, trading that into another larger project, rinsing and repeating in order to grow. I still feel like we're very much in a growth mode. We don't buy too many like stabilized, just low cash flowing properties. We're about equity multiple. That's still where we very much are focused on. So to answer the original question, I'm sorry, I will get back to it. I think it was very much acknowledging the current landscape and time that I was in, the opportunities in the city with the tax abatement programs, wanting to stay hyper local because I was hands-on management. We didn't go out of state until 2021 was the first time that we went out of state, and we bought a portfolio of storage properties in Indiana. Up until that point, very local, very much in our backyard where we could go drive, see the properties, check in, be there for any emergencies, be very hands-on because it was our money. It was all of what we had to invest. It was, as we started bringing in family and friends, it was, family members' retirement money. You don't mess around when you have that level of responsibility and trust from your people. So hopefully that answered the question.
No, absolutely. I mean, recognizing the opportunity. So let me ask you this. So along the lines of the topic, how to turn your real estate investment goals into reality, would seem like it started as a side hustle. Quickly, you realized the opportunity. At what point were you setting goals, or was it more of just a kind of a going with it, and again trying to increase your equity um, in your real estate plan, or was there a goal, or was it just kind of like trying to ride the wave?
Certainly, absolutely, there was a goal. Both Sergio and I are very goal setting and accountability and tracking our actions towards an end target. We're very focused around that. So it's annual, quarterly, monthly, and then that feeds into our weekly and our daily actions. So I would say that is fundamental for listeners or viewers that are wanting to make the shift. The power of writing something down on paper is massive. And then you 10x that by telling your close friends, telling some people that you really don't want to disappoint, that this is the goal that you're setting for yourselves. We supercharged that by joining a mastermind and surrounding ourselves with people that were similarly looking to improve or up-level their life, whether across professional accomplishments, maybe health goals, maybe relationship, what have you. So we did join a mastermind in 2020 and January of 2020, which was perfect timing. It helped us navigate COVID really, really beautifully because we found ourselves surrounded by a community of people that were very much about having the right mindset in order to pursue those BHAGs, right? The big hairy A goals, right? The goals that are just big enough that they scare you a little bit. So to get back to the question of, setting goals into reality, writing it down, speaking it into existence with your core group of people. And if your core group of people, um, speak negatively into that, or say, there's no way you could do that, or, rain on your parade in any way, well, then it's time to find new people and find people that will lift you up, that will challenge you, that will say, yes, how can I support you? Let me share with you what I experienced when I was going through some major growth. Or people that will say, oh, you have a goal of, buying one property a year. How do we add a zero to that? Let's think even bigger. So that was a big part of the personal and spiritual and mental growth that facilitated the growth of our company, our real estate portfolio, and all the change that has come over the last 12 years or so.
It's exciting. And the fact that you and your husband were on the same page, always helps. I love the fact how you mentioned how him being a native of the area had kind of these, historical boundaries of where and what you can do versus you having the fresh eyes, like, I don't know, it looks pretty good, to just even to enter that, because I think that is always a challenge, is how to break out of your habits, challenge yourself and to do more. So I'm sure that was a help to both of you. So let's talk a little bit more about, it sounds like in the beginning you were qualifying for the loans based on your W-2. You mentioned that very quickly or shortly thereafter, when you guys started acquiring properties, you kind of ran out of your own capital. But you talk about, having your network and, you know, constantly sharing with your network what your goals are, being in that conversation. I'm curious, when you realized that you were out of capital and that you needed to raise capital or find additional partners, how was that transition, and how did you guys navigate that?
It was really natural and organic. I mean, it never felt like we need to raise this capital. It was more like, well, we have this percentage of the down payment needed. Who else can we share this with that would really love to be in this project with us? Right. I think it's a different mindset of need versus I have this amazing opportunity. How can I share it with more people? Um, and so it was, our core investors, there were 14 through I'll call it the first 7 multifamily deals. And those 14 are family and friends. So it was really organic, just sharing about what we were doing. Now we did go through the practice of putting together a full underwriting file, putting together the full presentation. We didn't treat it any more lightly because it was people that knew us and already to some extent trusted us, even though real estate was a newer venture. The hurdle there, the level of accountability and responsibility there was even higher, right? Because there is no not performing or losing part of my father's retirement account or my brother's, whatever my brother was able to cobble together. There is no turning back the keys and running away to China and saying, sorry, guys, this didn't pan out. So we certainly took that very, very seriously. And the question was, how do we go from using our own to starting to pool with other folks? I mean, it was really just about, we had this pretty impressive pipeline of opportunity thanks to some relationships we had in and around Philadelphia, these properties that were being just turned around. They were going from being foreclosed, abandoned to completely gutted, turned into beautiful new apartment buildings. And it was really about sharing the opportunity. It wasn't about needing other people's money to do a deal. It was, there's really great opportunity here. Who wants to take part in it with us?
I love the way you frame that from a need to an opportunity. I think so often it's easy to, oh my God, I need the, if only I had this, if only, as opposed to recognizing the opportunity and sharing it with others. And that just had flipped the switch in the way you view something and your, if you need something, there's a potential to be desperate
Mhm.
in your appeal, as opposed to if you were so excited and like, oh my God, this is so amazing, and sharing that opportunity for others to get involved. And that I mean, it's the same deal, but just a completely different mindset and a different response. That's really cool. Um, so when you guys started out here and started working with others, um, the asset class was multifamily, correct? The
Mhm.
small multifamily. You mentioned that you've now since flipped to self-storage, I believe. Is that right?
Correct. Mhm.
Tell me a little bit about the transition from multifamily into um, self-storage.
Yes. So from a hands-on management perspective, storage is much simpler, right? You're not dealing with landlord-tenant laws. You're not at risk for eviction moratoriums or anything like that. And we had a pretty decent sized apartment portfolio during COVID, and we had also acquired our first storage facility in 2019. So I was on the ground managing both of those asset classes during the pandemic, and that was quite eye-opening. That really reinforced for us that the direction that we wanted to go as we continued to grow and scale was into the very much more commercial space, storage, larger larger properties in the world of commercial real estate, certainly office building and maybe large mixed use multifamilies where you've got hundreds and hundreds of doors under one roof is probably bigger. I mean, self-storage is generally a smaller size asset class, but we're looking at, when we started, our very first acquisition was 200 storage units under two roofs. And so that was a step up for us from the kind of small and mid-sized multifamily that we were in. So from an operational perspective, much simpler. You're not dealing with, if you do it right, you're not dealing with people living in your storage units, right? There's always some of those stories, but you're not dealing with human life underneath your roofs there. You don't have to keep up with kitchen trends or interior decor trends. You're dealing with poured concrete, sheet metal roof, sheet metal roll-up doors, and that's pretty much it. You make sure that you have solid lighting, solid security. The value that we brought to our first, I'll say 6 or 7 properties, they self-storage properties. They were all existing storage facilities operated by husband, wife, or individual owner operators. No or very little, very low technology. So my W-2 for the Federal Reserve was a project manager in our IT department. So when we started buying self-storage, it was really a technology implementation play. It was going from paper and pencil and cash to full back-end cloud facility management system, online automatic payments, just really modernizing the operations. So our day job and our work and career history really played beautifully into that. It really played perfectly to our strengths. My partner Sergio is a over 20-year veteran in the IT space, doing everything from rebuilding to computers to enterprise architecture. Was kind of the final part of his career before we both left and were full time on this. So he's very tech focused, very always thinking, how do we automate and use technology systems to take off of our human capital some of those more manual, repeatable processes for the day to day, and then use our humans where we really need that extra human touch, that additional creativity, anything else, like really use our people where people are the most important thing, and put all the technology tools to work to make every other part of our work that much more seamless, quicker, faster. And so that's how we, that's really how we made the jump from apartments to storage, and why we saw the opportunity there, much more opportunity in the storage asset class to do that, to just scale our holdings overall, go into larger properties, drive a little bit more value. And we also, this was about, we started educating ourselves on storage, I want to say mid 2017, started making offers thereafter. We closed on our first storage facility 2019. So there was, at least a year of educating ourselves, educating our investors about why we were thinking of making this wholesale pivot into a different asset class. And that time we were looking back to the crash of '08, knowing that macroeconomic cycles generally move in about 10-year timeframes. We were expecting some sort of market downturn, market correction, somewhere in that 18 to 20 timeline. So COVID came in 2020 and adjusted the world. So we felt like we were really well positioned moving into a more resilient asset class. So self-storage has performed just more solidly, more stably through market ups and downs. I'm a bit more risk averse, so I liked that component of storage, especially after all that we experienced with COVID in managing tenants and eviction moratoriums and things like that. So I liked the simplicity of the asset class, the stability of it, the historical stability of it. It's the lowest distressed real estate asset on when you look at graphs or compilations of data on mortgage and debt reporting. Self-storage debt is 0.24 or 0.25% is their default rate, versus you can get up to 8 or 10% in office or retail. So when you look at it from that kind of a lens, those were all, and this was a long answer, but those were all components of what we were thinking of and looking at as we were like, okay, well, we know that we love investing in real estate. We know that we want to build a real estate portfolio with people that also want to be on this journey with us. How do we continue to grow and scale in a way that is stable, where we're not getting caught up in any bubbles? Like, what is the most safe way for us to grow responsibly, for us to not get ahead of our skis, right? But we do want to continue to grow, impact more lives through real estate investing, continue to do bigger and better things. What is the right asset class? How do we get there? So storage was the asset class that we landed on. We bought our first 5 here in our backyard in Pennsylvania, so we could drive to them. The very first one, it was far enough that the commute was pretty long. So we ended up just buying a travel trailer and parking it on site. And that was our crash apartment kind of for the work week. So, we stayed in our backyard for the first few, and then we went out of state and started leveraging other managers as we grew the portfolio. Today, we have a couple different REITs manage some of our sites depending on the location and the profile of the project.
Got it. Well, clearly the transition, and I appreciate you walking me through that. I mean, from the 2017 making offers to where 2019 you finally landed one, and then having the COVID experience, multifamily versus the self-storage, and just all the weird challenges that COVID presented with multifamily and anything residential. Very frustrating as a landlord. So I'm curious, you've mentioned a couple times here, as you and your husband and you were, dealing with friends and families, money, there's a high degree of concern that you act appropriately so that you have a fiduciary responsibility to your family and friends. Um, Tell me a little bit about growing your team from just the two of you. At what point did you start adding people beyond just the two of you?
Yes. And
And
this is
also,
something,
who are the members of or not
yeah.
necessarily the name, but just the position the first
Yeah.
one and that.
Yeah, so the core functions that we brought in additional people to help us with as we grew would be acquisition, so additional underwriting and analysis, as well as sourcing deals. Um, Construction, we do, and that continues today. We do a fair amount of ground up construction now. So we have not only a director of construction, but a kind of his dedicated right-hand man, if you will, senior construction manager, a COO, so somebody deeply experienced in storage. Our COO has over 26 years in storage operations, from public to Extra Space to a private REIT. So we went out and hired people that were smarter than and more experienced than us, because we're still very new in the game, right? And I think that there's a massive amount of self-awareness and self-confidence that is required there in order to release your ego enough to hire people better than you, right? But you have to, in order to grow a team, in order to grow a company. If you're new in the entrepreneur or business owner seat or experience, you only know so much. So it's very much, we also have coaches. We've surrounded ourselves with people who have decades more experience than we do. So being able to call upon those resources as mentors, as coaches, as guides. But you asked about building the team. So fundamentally, property management, asset management, deep financial experience. Our CFO comes from kind of the private equity financial space. COO, our head of construction, and yeah, so underwriting the deals, managing the projects as they're underway, both from the investor side as well as from the actual either executing on the construction or executing on the management, making sure that our managers are doing what we need them to do. And then financial reporting, right? CFO, controller, bookkeeper. So those are kind of the core roles. I'm probably forgetting someone, and Hearth Fire team, I apologize if I'm forgetting any of your very core functions right now. Another really critical member of our team is a family member, is Sergio's sister, and she is our core investor relations kind of back office, just anything and everything that our investors might need or questions that they might have. She's the go-to person for just fielding any kinds of questions or comments that might come up during our projects. Are generally a 5-year hold. Some folks have, they have life circumstances that come up and they need to either change or liquidate, or if the investment was originally made personally, they want to move that into a trust or something else, handling that kind of just whatever our investors might need during the course of their relationship with us. Anna is the primary point of contact there. And Sergio takes the lead on acquisitions, strategy, underwriting. We have head of underwriting. We have a couple analysts rounding out that team as well. And I do more of the relationship, these kinds of opportunities, speaking with you, sharing our story, talking with other folks about what we do, why we do it. We've also had from our personal networks a fair amount of folks that want to get started in storage, right? And so they'll say, "Hey, Corinn, I looked at this. It's in my backyard here in Georgia. I think it'll be great, but there's this, and this that I'm worried about. Any suggestions? What can I do? What am I not thinking about?" So kind of being a resource for anyone that wants to get started in their storage journey. We've now built a pretty deep bench of deeply experienced people in storage specifically. So anytime that we can help contribute, maybe spare someone a very expensive lesson that we've already learned one way or another. That is, that's a bit about what our team looks like today. I think we're somewhere in the mid-teens as far as total number of folks. But those are the core functions that we have amongst our team.
Yeah. Well, and how important it is to recognize your limitations. And I love what you said about, recognizing hiring smarter people than you. And I think that's a challenge for a lot of people, self-included, is just recognizing one's limitations and, hiring outside of that in order to grow, and how smart that was. Um, if you had like a something to leave the listeners with, as far as the one thing to do if they haven't done anything else in order to get the ball rolling so they can turn their real estate investment goals into reality, what would you what what is the one thing that you would encourage them to do?
It's hard because everybody's situation is going to be unique. I think analysis paralysis is a spot that catches us a lot. So I would encourage folks to just get started, and maybe it's just a duplex, or maybe it's a home with an ADU that you can, rent out and make a little bit. Um, I think the most important thing is to start and to get in the game. You're not going to know everything when you start. You're not going to know everything 10 years later. I think the most important thing is starting the momentum. And once you're in the game, and once you're actively at work, then the lessons will come. And as long as you have the right mindset about learning, always failing forward, you're gonna fail. Nothing's gonna go perfectly. So it's really very much about having that blend of the right mindset to go forward and go after the crazy dreams and the crazy big visions, and also applying the work ethic to it and being able to pick yourself up when things fall apart and continue on. So a huge part of that is surrounding yourself with the right people, having your own personal regimen that keeps you healthy mentally, physically, spiritually, so that you can recover from the blows that are inevitably going to come, having your support network around you, and then doing the thing. Like just go out and get started one way or another, whatever that looks like. We spent a decent amount of time in our career playing in that small, mid-sized apartment space. Looking back, I would have scaled more quickly to larger properties sooner, but I don't regret any single moment in our journey because it got me to where I am now. So, I don't know if that's exactly one piece of advice or like five rolled into one. I do,
Well,
may
to
I
get
say,
started, yeah, go ahead.
yeah, so I was very lucky with my parents, and I try to also work this into anyone that I speak with, especially if they're younger in their journey, having and I'm not an insurance broker or agent or anything like that, but I was very incredibly lucky that my parents purchased a whole life insurance policy on me when I was born, and that amount they added to, and they grew it over the next 18 years of my life. So I was able to borrow against it for college and repay it, and then borrow against it again for my real estate investment. So anyone who's listening, if you're younger in your journey, or if you have young children, and I don't have anyone to like point you to necessarily, but just investigating the concept of whole life insurance. I hope you don't mind, Darren. But
No?
it was transformative for me to be able to get out of not one but two degrees without any college debt, right? And being able to then reuse those funds for my real estate investing and then pay myself back as I was lending against my own policies. So if especially if folks listening are newer in their journey, that concept of infinite banking or using whole life insurance, I always like to at least give that a few moments of talk time, because it really allowed me to really get started and do so much of what I needed to in the beginning just to get started.
No, I love the topic and would love to talk to you more about it some other time. Hey, if we could, Corinne, I'd like to shift gears here for a second. As we've mentioned, by day I'm an insurance broker, and as such, I work with my clients to assess risk and determine what to do with the risk. And there's three strategies we typically consider. The first is, can we avoid the risk? If we cannot avoid the risk, can we minimize the risk? And if we cannot avoid nor minimize the risk, we look to see if we can transfer the risk. And that's what an insurance policy is. And as such, I like to ask my guests if they can look at their own situation. Could be the market, the interest rates, the Fed, taxes, whatever you identify and consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance related answer. And so if you're willing, I'd like to ask you, Corinn Altomare, what is the biggest risk?
For self-storage specifically, and I'll go there first. Something that we keep a very close eye on is oversaturation because it is such a niche market kind of service and real estate and business. So that's something that we head off very early in our underwriting process. We use a number of technology tools that not only track existing inventory in any given market or region, but also what's coming in the pipeline, what kinds of either zoning applications or new development, new construction permits are out there to make sure that we are not either buying or developing in a market that's already teetering on the brink of oversaturation. So that's something, very specific to what we do in self-storage that we look at. That's a primary risk, I would say, just because it's the laws of supply and demand. So that's something that we keep a close eye on throughout the acquisitions and due diligence process. We also verify that when we visit potential new acquisitions in person and tour the market, make sure there's nothing that we missed virtually that we can then find out while we're there in person on the ground. And then on a more macro level, I mean, there's so much in our world that we can't control. And so the biggest risk is simply the unknown unknowns. And I can't solve or protect against those other than building our team and business on the best possible quality and caliber of people that we can. At the end of the day, you want to be able to know and trust who's at your side in a storm. And while it's tough to, it's really tough to know who it is you're doing business with and to get to know people and vet them, especially when you're, considering investing with somebody, right? And considering handing over a decent portion of your retirement or your savings. I very much believe that it comes down to people. The wrong people can take the best deal and turn it upside down. The right people can take something that's, on paper pretty modest, but through their commitment, through their integrity, through their work ethic, deliver on what that is supposed to be, what that is supposed to return to our investors. So for me, at the end of the day, it's all about the people that you surround yourself with, that you trust, that you invest with.
That's awesome. Hey, Corinne, where can listeners go if they'd like to learn more or connect with you?
Our website is hfireholdings.com, and you can pretty much find through that website any way to get in touch with us. My personal phone number is in my email signature, so I'll give it out here. Why not? I am 818-378-1524. 818 area code from Glendale, California, but I am living in Westchester, Pennsylvania nowadays. So either of those routes, or you can find us around online. Thank you for the conversation today, Darren.
Thank you. Yeah, thank you for taking the time to talk. I've learned a lot and really, really appreciate you taking the time. And I look forward to talking again soon.
Sounds like a plan. Take
All
care
right.
until then.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.